Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will not miss another video update. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with the 1 hour time frame. So here we have Bitcoin paired up with USDT. This is the Binance chart, and as predicted yesterday, we did see that breakdown. So we broke down from the channel, the parallel channel that we were tracking. We had the higher highs, the higher lows. We broke down. We are still technically in a higher high here at the moment. We are looking for a minimum of 35,500 flat to double bottom, but I suspect we still have further to the downside yet. Taking a look at the structure, it doesn't have a good structural point at the moment. Looking at this, I think we are probably going to have to move down a little bit deeper. Let me go ahead and do the sense checks right here for the wave 3. I think, yeah. So we've come down lower than the 1.236. We've got to be hitting the kind of 35,121 for this breakdown to kind of amount to our 5-wave structure. Now, it's possible that we get a diagonal here. It is. So that's always a possibility that we bounce up and then we just fall down one more time, hit the kind of double bottom, lower expectations, and then we're off to the races from there. So we'll keep a close eye. We'll keep an open mind to the structure that is going on here. We did rally up quite a bit before we fell back down, and the move to the downside here is inconclusive. It does look impulsive. It can move down, finishing off a wave 3. So let me show you what I mean here. Right, we have this kind of wave 1 idea, this wave 2. Wave 3 would have to come down here to 35,121, would then bounce up and then drop back down again. And once you do that, then you've completed your entire zigzag pattern. The zigzag pattern in itself, though, is something that doesn't have to go down that deep. We are really only talking about a move down here. It's actually quite aligned to where we were previously. So good support to be found, but we are going to be talking about 34,728 to 35,286. That is kind of the range that we're looking for there. Obviously, we need to make sure that we stay above 34,120 to keep everything nice and aligned. And I do know, guys, this is a rather complex subject, but for the most part, if I delete all these Fibonacci retracements, you can kind of see we had a 5-wave move here. We've moved up. We're looking for a 5-wave move down. And this comes down to the fact that if you have 5 waves to start with, you must end in 5 waves. You can't just have a random 5-wave move. You have to start. If you start with 5 waves, you end in 5 waves. And so we had 5 waves here. We end in 5 waves. Now, it's possible that this becomes part of a running flat, meaning that is the end position. I just don't think it is, logically speaking. I think we still have to move down a little bit deeper here. So, like I said, 35,500 flat would be my minimum expectation, double bottom, and then we can start talking about this move to the upside, where we are talking $38,750 to $40,000. That hasn't changed for a while, and it's because we're still inside the wave 4. Now, from the traditional side of looking at this, we can see that, let me just get rid of the 5-wave count there. We have the white line, that's the 200 EMA, the red line, that is the 50 EMA, and the yellow line, the 50 SMA. We are below all three. We are looking with the 50 EMA and the 50 SMA looking to cross down lower than that of the 200 EMA. So, like, traditionally speaking, if you're just an EMA trader, this isn't going to be stacking up very well on the short time frame. It does look like we are likely to see a bit of a break to the downside here for Bitcoin in the kind of the shorter time frame. Now, ultimately, on this hourly chart, we are in a bullish structure still. That's because we haven't broken that existing low at 35,500 flat. If we do that, then we just get another change of characterization back into bearish. As you can kind of see, it's a big sideways trading movement here, and you're seeing basically liquidity getting grabbed. You can see long positions getting wiped out. You can see short positions getting wiped out, more long positions getting wiped out, more short positions getting wiped out, and you bet it, more long positions getting wiped out. Ultimately, we're in a bit of a ranging market, very difficult to trade, and lots of liquidity grabbing occurring. Moving this out into the daily time frame, we can see that we are still tracking that 5th wave movement. I think we're in a diagonal of the of the fifth wave movement that is also a diagonal. So looking at it, I think we are either still in the wave 4 here on the kind of daily. I don't think that's necessarily the case though. I'll be looking at this more as we are looking for some kind of diagonal move here to get us up towards that $40,000 or $38,000 to $40,000 level for that final fifth wave movement in this expanding diagonal on the daily. Now, from our EMAs, we are above the 200 daily EMA, the 50 EMA being the red line above that, and we're above the 50 SMA. So from a traditional standpoint, we're still in a bullish structure from the EMA standpoint. We're also still in a bullish structure from our smart money concepts, right? We can still see here that we've had these break of structures. These are bullish break of structures, meaning that we have these continuational moves to the upside. I suspect though that this upper area around $40,000 is going to be the upper limit, and we are going to be then looking for a move of substance to the downside, looking at support around $31,000. That's also going to be a fair value gap to get filled out. If we do not hold this area of 30 to 31,000 and we lose those area of support, then we are going to have to be talking about moving down to 24 to 25,000, which is the next area of key levels of support, as you can kind of see just down here on the low side. So it's going to be interesting to see what happens. Overall, we do potentially have a pretty decent chance at finding support, but I suspect longer term we are likely to see moves to the downside. Now, from the weekly standpoint, you can see we're in an ascending channel. Again, another bearish pattern. Here we have the higher highs, the higher lows, and we do want to have a tendency to break on down. We are overbought on the monthly and the weekly time frame from the stochastic RSI point of view, so it's not looking strong there. We still have that ability to push up, of course, towards $38,000 and $40,000, but ultimately we are running out here. We're running out of time. We're running out of momentum. We are then going to be looking at the kind of fair value gaps that were left behind all the way down at $17,000 on the weekly chart. Now, there's no guarantee that you fill these, but they are there for points of reference and of interest. Obviously, this is a big bullish movement. Oh, this big movement to the upside has the appearance of being bullish, but if we take a look at the volume profiles, we can see that the volumes are actually non-existent in relation to where they were previously. Let's just take a look here. You can see how volume is moving down whilst price is moving up, right? So price moving up as volume is moving down is a divergence. It's very irregular. Normally your price goes up when volume goes higher, not the other way around. So it means that there's something else going on here that's outside of the norm, and so we want to kind of be really aware of, that kind of level of perhaps manipulation in terms of price action. We've gone on to continue these higher highs, yet there's no real volume back in it, which makes me wonder who has the most to gain during these moments of volatility, because I bet by bottom dollar that it's not going to be the retail investors that are essentially making the most here. I think there's a lot of exchanges, market makers that were in financial difficulty at the end of 2022 after the FTX crash, and all of a sudden they are now very affluent. I think they have recovered from those losses, all at the expense, I think, of retail investors during all of the liquidity grabbing that we saw going on. One of the other things that we note here from the candlestick patterns is the overlapping nature of everything that's going on. It doesn't give me confidence in a long-term move to the upside to be sustained here. I am looking for a move down as a last opportunity. There's many different catalysts for this, whether that's a Fed pivot and Bitcoin spot ETF rejection, which I spoke about in a video the other day. A lot going on with the ETFs in the background. It's very interesting stuff. And if you were to see that, then yeah, I think we are likely to see that $20,000. Now, I'm not saying that we have to go down into a new bear market low. There's always a possibility of that, but I don't think that's going to be the case. I'm just looking for $20,000 as a good place to wreck those altcoins, wreck those retail investors, allow for institutional investors to buy cheaper, whilst Bitcoin has a consolidation phase at around $20,000. Now, it sounds awful, but essentially this is how the market works. We generally see this time and time again. Retail investors are used as a form of liquidity, essentially. Very few retail investors actually make money in this space because they're usually overly emotional. Now, ultimately, I'm looking at how altcoins, or at least some altcoins, still have the potential to move down into new bear market lows. Some altcoins look like they have bottomed with some fantastic runs, which is great, but I still expect a lot of retail investors to get caught out and get wrecked, as there is going to be, in my opinion, a 40 to 50% crash across the market. Now, that move in the market is is going to be a huge opportunity for institutional level investors. So for me, when I take a look at Bitcoin here, I'm looking at this and I'm saying, yeah, we could probably see a 40 to 50% move for let's say $40,000 if we do reach that upper limit. Where does that actually bring us? Well, that's going to take us down to about 23,000. If we go down to about $50,000, 50% drop, that's going to be about the 19,800. So you can see that this move to the downside, although would be very, very common if you look at 2017's bull market, it would basically wreck most of the retail investors who are not used to these kind of levels of volatility within the space. So, a word of warning, I think ultimately we are in a reasonably good market. This reminds me very much of early 2019, where obviously we get into 2020, we do see natural healthy pullbacks mid 2019. We go into 2020 in a really strong way after the correction. We haven't had the correction yet, so we can't go into 2024 in a really strong way without that correction, in my opinion. But again, if it doesn't happen at the end of this year, it's going to have to happen early next year. And historically speaking, Fed pivots happen in March. And if a Fed pivot does happen, we've seen historical crashes just before we actually get those big bullish markets starting. So, it's going to be an interesting one. I'm going to leave the video there. You can let me know your thoughts in the comments down below. If you found it useful, informative, smash the like button. If you're new to the channel, subscribe. And if you haven't joined us in Discord, check it out. Link is in the description below. Until the next one though, guys, have a fantastic day.